Wednesday, January 15th, 2020, Maneco 64, home of alternative economics and contrarian views. Interesting story came out a few hours ago. Article in the FT, the world's biggest hedge fund sees gold rallying as central banks ease. They see it going over $2,000 an ounce, making a new record. So I'll go over the story. It doesn't surprise me, of course. I've been telling people that gold and silver are going to continue to do well, mainly because the central banks are easing and there's no way out unless they want to implode the system. They need to keep easing, and not only central banks, but the governments now are starting to spend or to turn on the fiscal tap, so to speak. So go quickly over this article here. This is my second video today. It says Bridgewater sees gold rallying as central banks ease. Hedge fund manager Greg Jensen says precious metals could rise 30% above $2,000 an ounce. Bridgewater Associates, of course, was founded by Ray Dalio. So I'll go through the story quickly here through the article by Jennifer Ablen in New York. Greg Jensen, co-chief investment officer of Bridgewater Associates, the world's largest hedge fund, says gold could surge to a record high above $2,000 an ounce as central banks embrace higher inflation and political uncertainties increase. Mr. Jensen, who helps oversee more than $160 billion at the Connecticut-based group, told the Financial Times he believed the Federal Reserve in particular would let inflation run hot for a while. Yeah, they've said that. The Federal Reserve has come out and talked about that. And there will no longer be an attempt by any of the developed world's major central banks to normalize interest rates. What I've been saying the last, 6 months or more. That's a big deal. At the same time, Bridgewater sees political turbulence on multiple fronts as slowing U.S. economic growth exacerbates the divide between rich and poor, while tensions rise with China and Iran. Against that backdrop, Mr. Jensen said in a telephone interview that gold prices now trading at about $1,550 an ounce could gain 30% and should be considered in investors' portfolios. There is so much boiling conflict that gold being part of a portfolio makes sense to us, he said. People should be prepared for a much wider range of potentially more volatile set of circumstances than we are mostly accustomed to. Yes, gold does well when there's a lot of volatility in the markets. When the VIX is low and depressed, gold doesn't do as well. I won't go through the rest of the article because basically he's talking about things that I've spoken to you guys already. It's nothing new to us, so we're ahead of the curve, even ahead of the biggest hedge fund in the world, which manages $160 billion a year. Of course, he might have had this view months before. This is just an interview he did with the FT just recently. There you go. The biggest hedge fund in the world sees gold as a safe asset to have in the current times where central banks are going to keep inflating. They're going to try to get inflation even higher than it is now. And by inflation, I mean the CPI, which isn't really right, because inflation is the creation of money and credit, or the abnormal creation of money and credit. Prices are, of course, the consequence of it, but this is what they look at. They want to get the CPI up to 3 or maybe even 4%, and that's going to be good for gold. The geopolitical uncertainty also helps. If you enjoyed this video, make sure you hit the like button, share it far and wide, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, BitChute, DTube, and Steemit. I wish you all a great day. Take care. Bye.